I just want to really welcome all of you to the Long Beach Accelerator's Investor Roundtable. I'm Andrea White-Cuse, Managing Director of the Long Beach Accelerator. We also have Janelle Kronk, our Programs and Operations Manager, and Joseph Scher, our Business Development Manager here from the Long Beach Accelerator, as well as a number of board members, mentors, and instructors, and just a whole bunch of supporters from our ecosystem, as well as I can see a lot of startups. So that's fantastic. We're happy to have all of you here. We've arranged for 6 strong and active VCs to be here to talk with you about what they do. We have Shen from Sunstone Management, Nish Patel from Inertia Ventures, Ann Blum from Angular Ventures, Ben York from RampRate, Valentina Rodriguez from Wonder Ventures, and Will Chockley from 75 and Sunny. So this is going to be a reverse pitch type event. There will be 5 minutes for the VCs to tell you more about themselves, then 5 minutes for the audience to ask questions. Please, audience, use your raised hand icon on the Zoom menu to indicate that you have a question. And just keep in mind, since this is, again, part of our Cohort 3's curriculum, make sure this is kept as an educational public event. Please keep your questions to those that you think would be instructive to others in the audience. In other words, no active pitching today. Save that for a follow-up conversation. So that will be followed by 15 to 20 minutes of breakout rooms where you can interact one-on-one with AVC. And then we'll all come together for a closing. I just want to share a little bit about the Long Beach Accelerator as we get started here. We're a public-private university partnership between the City of Long Beach, Cal State Long Beach, and our capital partner, Sunstone Management, who you'll have a chance to get to know today. We are sector agnostic and recruit nationally. The LBA leans into a few things that make us different. Our public-private university partnership wraps a ton of resources around each company from the get-go, from an average of $100,000 in upfront funding to a massive network to unique access to strategic partners and facilities. We are in Long Beach a majority minority city, and diversity is baked into our DNA. 2/3 of our cohorts are underrepresented founders. That includes women, Black, and Latinx, among other things. And that same diversity is reflected in our board, advisors, mentors, and instructors, as well as our ecosystem in general. We're extremely founder-friendly. I know everybody says that, but our curriculum is workshop-based, so every minute you're working with us, you're working in your business. We keep our cohorts small so that we can work individually with each company. And we believe that building strong businesses will make strong investments. So that's our focus, our first and second focus. And then, although we're early, just a little quick brag here, we're just in the middle of Cohort 3, as I mentioned, and with a year under our belt, we've seen extremely strong results from this. 20 companies, $7 million raised between those companies, 2.2 million in revenue, and 3 acquisition offers straight out of the accelerator. And also for those of you who haven't heard, we've recently announced that together with Sunstone Management, all LBA cohort and alumni are eligible for our Sunstone LBA Hypergrowth Program, which is a $500,000 direct investment. For those of you who are interested in becoming eligible or who know great companies and founders who would be, we have an open application for Cohort 4, but the deadline is this Sunday, February 27th. So please apply and or spread the word quickly. And yeah, now on to the main event, everyone that you want to hear from. So first, I'd like to introduce Shen from Sunstone Management, the LBA's capital partner. He's going to tell you a little bit about Sunstone, and then we will follow that up with the ability to ask some questions of John. John, go ahead and take it away.
Thank you, Andrea. Can everybody hear me?
Yep.
Great. It's an honor to kick off the competition today. welcome everyone to this interesting pitch competition that I have never heard or experienced myself. So I'm excited. My name is Shen, founding partner of Sunstone Management. As you already know, we are the capital partner of the Long Beach Accelerator. The firm itself is based in Irvine, California now. We used to be in Long Beach. Now, if you are an entrepreneur of a startup, you come to an investor like myself, I think you'll be happy if you can get a check, right? But that's probably not your ultimate goal. Your real goal is never to grab the check and run. Your goal is to build your company and grow your company. So the growth of the company is your ultimate goal. Now, if that's your mentality, I think the ideal investment partner should be someone not only understands the growth, but also experience that, so they can help you facilitate your growth. And Sunstone Management is exactly in that situation for you. Sunstone Management is a young company that started back in 2015. But in the last few years, the company has gone through an exponential growth period that we're so proud of. We actually posted a 1,028.4% revenue growth in the 3-year period starting 2017. So that's actually year 3 to year 5. And I have some hardware I can show you. I have to be careful, but Inc. 500. This is what Sunstone Management received back in 2020. So we were ranked in the top 500 fastest growing companies by the Inc. magazine. So fastest growing company. This trophy is from Financial Times. So they ranked the fastest growing companies in Americas, not just in US, in Americas. Last year, and Sunstone Management was ranked number 59 on that ranking. And I can tell you, Tesla was ranked number 246 on the same ranking. Uber was ranked number 253 on the same ranking. Facebook was ranked 353 on that same ranking. So as you can tell, all these giant companies were beat by Sunstone badly in the same competition. So we also have tens of other fastest growing company hardware trophies we won from the last few years. I won't show you all of them, but these are some of them. So speaking of our goal, when we work with a startup company, we like to gauge the potential of the growth. So we like to look at the company, and figure out in 5 years where the company will go and what will be the seeding of the growth. So that's our investment thesis. We at this point offer a post-money safe to the startups that are coming into the LBA program. The average check size is about $100,000. So it depends on the a number of different factors. But the investment amount could go from as low as maybe $50,000 or $60,000 all the way to $150,000. But on average, we're looking at $100,000. Now, as some of you already know, and Andrea already mentioned that, we are launching a new program called a Hypergrowth Program that will offer $500,000 one lump sum investment into a startup. And this is a direct equity program. It doesn't work like a safe or convertible notes. It's more like your price round equity financing. Okay, so I know we only have a limited time, so I want to stop here and open up for the questions. Thank you.
Thanks so much, John. Really appreciate it. Janelle, do we have any raised hands here? Any questions for John?
Not yet. Feel free to use the hand reaction if you have a question.
Oh,
All right, it looks Shira.
Hi, I'm just curious to learn more about the hypergrowth program. I know it's still in progress. Is it going to be just one company that gets the investment, or are you selecting several companies?
So the opportunity is open to all the LBA startups. So whether you're a current corporate member or maybe an incoming member or even a graduate, you're all qualified. There's no limit as far as how many companies can get that funding within a certain time period.
Amazing. Thank you so much.
You're welcome.
Shira. Mike.
Hi, Jen. Just wondering, are there any particular industries or focuses that you are looking at in particular, or are kind of at the top of your investment list, I guess?
So we try not to limit ourselves to certain sectors, but it is a critical factor in our evaluation process because. As you know, Mike, certain sectors evolve, the way that maybe other sectors do not. So there are different phases. And I think, for example, space technology versus blue technology. Blue technology is at this point still in a very early stage. So we're talking about maybe 4, 5, 6 years from now to have the real, chance to get everybody know that industry, and that's the time that I think the industry will hit the every single headline, just like what space technology did in the last couple of years. So in this case, if we have like 2 different opportunities, one in space technology and the others in blue technology, we might be leaning a little bit more towards the blue technology one because the potential of the sector.
Great.
Does that make sense?
Definitely. Yep. Thanks.
Thanks.
Thank you. Next, we have Adrian.
Hi, John. Thanks. Pleasure to meet you. I didn't know that you were in Irvine. That's fantastic. I have a question for you regarding the new program you're going. You mentioned that you previously did a number of post-money saves, and I looked at your Crunchbase, like you're funding companies at a pretty fast round, mostly in the pre-seed seed area. So that's awesome. What made your decision to make this $500,000 lump sum into a price round equity type thing versus a post-money save?
Adrian, we're going to share a lot more information in the next couple weeks with everybody. At this point, what I can tell you is that we're actually taking advantage of a federal economic development program that targets job creation as the ultimate goal. So the hypergrowth program would ask the startups to work out a plan to create certain number of jobs in the future. And in exchange for that, the money is available.
Thank you.
You're welcome.
Caleb.
Thank you. And thank you, John, for presenting. My question is, what are the top 3 things that you look for in companies that you fund?
Okay, so the top 3 things, very good. Number 1, the owners, their background, their mentality, their vision for business. Number 2, the sector, like I mentioned earlier, the faces of the sector for not only for now, but for the next 5 years. And then we look at the products or services that the company is developing. And those are also important as we can maybe gauge the potential size of the market.
Thank you.
You're welcome.
Fantastic. I don't know if we have more hands raised for John, but it is, unfortunately, we have a sort of lightning round here, and there's a limited amount of time. So I think we will, yeah.
And just one last question. If John, just wanted to ask if, is the fund only available to companies that move into Long Beach? And that's it. Thank
you. At this point, we highly recommend companies that come to Long Beach if they want to pursue this hypergrowth funding. There's probably no restrictions as far as in the future where the company needs to be located, but I think we would provide a lot of guidance as far as where to create the jobs and things like that as part of the requirement of the program.
All right. Thank you so much, John. Really appreciate you being here, and stick around for some more discussion with our audience at the end. But next, I'd like to
my pleasure.
I'd like to introduce Nish Patel from Inertia Ventures, and go ahead, Nish, whenever you're ready to talk about what you all do.
Awesome. Well, Andrea, Joseph, first of all, thank you so much for setting this all up. You guys have done an amazing job. So I think that's very commendable. Happy to share a little bit about our thesis, what we look for, what we look for in founders as well. And then, we can open it up for Q&A. So thematically, Inertia focuses on primarily US-based prop tech and fintech companies, usually at the Series Seed and Series A stages. I think the way we generally think about it is we like to come into a business when a product is fully baked and fully developed, and they've got some threshold product market fit, but they're really entering the commercialization stage. And the way we think about that is we like to filter for companies that we think we can add the most value to as a function of our domain expertise and a function of our network. We have really strong interconnectivity across the institutional real estate and financial services ecosystem. So, when a company is really trying, especially with an enterprise focus, trying to tackle big problems in some of these larger markets, that is where we end up being able to create the most value for a lot of those companies. Our average check size range is between 1 to 5 million. We take a barbell approach. So on one side, we focus on those earlier stage companies, which is probably a lot more relevant to this cohort. The other side, we focus on later stage growth opportunities, primarily around fintech and enterprise SaaS. On the early stage side, I'd say we will lead rounds and get involved at a board level, a quarter to half the time. So collectively on the boards of companies worth in excess of $500 million. And that is a really broad range, and there are several industries that covers. The way that we think about that too is when we invest in a company, we like to take more of a value add model as opposed to a typical venture capital spray and pray model of just throwing a little bit of money in a bunch of deals and just hope something sticks. I think what we prefer to do is find amazing operators working on great problems that are making a big difference and get really involved wherever it makes sense. So we have been known to add value in areas like product roadmap prioritization, pricing strategy, go to market. How should we price something? Should we raise debt or equity in this round? Should we outsource our tech team to this region? So a lot of questions that I think as a founder, you don't really think about until you get there. But the way we like to look at ourselves is really like a group that you can come to and call on for questions that you're afraid to ask, maybe other traditional VCs. So we take, I'd say, a very founder-friendly approach. And we also work oftentimes with companies that might be a little bit too early for our mandate. So there are several companies that are in the pre-seed or early seed stages that we'll very, very closely work with, make introductions for, give strategic value to, and eventually when they do reach a stage of maturity, they become more ripe for our investment mandate and criteria. What I would say that we typically look for in founders, I think has kind of evolved over time, but fundamentally in any early stage investing, part of what you're doing is investing in the numbers and the idea and whether or not the problem that's being tried to solve is big enough of a problem to be venture backable. But a big part of it is also the team, the people. That's everything from the cohesion amongst a management team to the characteristics of founders and COOs and CTOs. Do they have an ego? Are they going to be transparent? Are they willing to learn? Do they recognize where their strengths are, where their weaknesses are? Do we think that they're motivated by you trying to make a quick buck, or are they really passionate about the actual problem they're solving and the thing that they're building? So, I think in a COVID environment, a lot of venture investing has shifted in ways where founders and investors won't necessarily have the opportunity to meet face to face or spend a lot of interpersonal time together. But that's something that's actually quite important for us because we want to make sure that the relationship is enjoyable on both sides. I think I would encourage a lot of founders in this cohort to also be very selective about their investors and make sure that they are understanding what investors can provide beyond just a check. Do you like working with those investors, especially if they're going to be a lead for your round or more involved?
Have a nice weekend. Thank you, you too.
Heard a little bit of background noise, but look, I think covered the gist of mainly what I think I wanted to share. So, I think it's probably a fair time to open it up for Q&A.
Sounds great. Janelle, who do we have?
Trevor.
Hey, Nish, I'm Trevor, co-founder of RideShine. So are your real estate connections primarily commercial or residential? And then as a follow-up, in the prop tech space, for the companies that you've invested in, what has been the differentiating factor between the ones that ended up succeeding versus the ones that didn't?
Yeah, great question. So the way that we're structured, a lot of our LP base is comprised of large real estate family offices, real estate-based billionaires, and other ultra high net worth individuals that can be incredibly strategic. So that runs the gamut of owners of industrial, of multifamily, of hospitality. So it's really every property type that's really covered, which gives us a lot more range and optionality in being able to find different companies within the prop tech landscape and be able to bring material value and network connectivity to the table. Beyond that, my background is in real estate investment banking, and one of our other partners previously ran $1 billion portfolio at one of the largest asset managers in the world. And as a function of that, we have really close proximity to decision makers at the largest real estate private equity funds, the largest property managers, and the largest institutional brokerage shops. So it's it really runs the gamut pretty broadly. So we'll look at things that are working in the single family rental space. We'll also look at things that are working in the hospitality and industrial or medical office space or senior living. So it really runs the gamut from that perspective. And to answer the second part of your question, I don't think there's any particular rhyme or reason that I describe that singularly determines whether something's going to be successful or not. But from a venture return perspective and from a speed of growth perspective, what we have found is that models that have more of an enterprise focus and focus on working with institutions that you close one deal and you immediately get X number of houses or X number of units, which is an order of magnitude higher than trying to target growth at an individual and consumer base level, that has ended up realizing shorter time horizons for value capturing in our experience.
Thank you. Next we have Leanne, Plausible.
Hello, I'm Leanne. I'm founder of Plausible. I was curious, you mentioned, you do on occasion fund early stage startups. And I was just curious, can you give an example of like one of those startups that you funded, and what was it specifically about them that compelled you to go in at such an early stage?
Yeah. I mean, so I think what I was kind of insinuating was that we won't necessarily invest in a company that's too early for our mandate, but I will keep in touch, or one of our partners will keep in close touch with those founders and regularly keep a sync, understand where they are from a strategy perspective, a revenue growth perspective, product perspective, and then spend a lot of time adding value and making connections along the way. So quick example for that, there's a company that we invested in called, actually, I'm not going to mention it because the latter part of the news isn't public yet, but the company was doing under $1 million of revenue, but I really liked the cadence with the founder. He was very honest, very transparent. And, when he shared his projections, I knew that it was maybe a little bit early for us, but I was really excited about the product that he was actually building. So I made a number of material introductions to prospective customers for him, gave him advice on how he should think about product roadmap, and actually steered him away from going a direction that I think would have actually taken the company in a much lower growth direction. He ended up kind of keeping in close touch with me and implementing a lot of the customers that I introduced and ideas that I put forward. And maybe 4 months, 5 months after that, I looked at their actual month-over-month growth, and that actually surpassed what they had initially projected. That's one of the other facets that I really look for in founders. Of, are you the kind of person that over promises and under delivers, or under promises and over delivers? And that was a clear case of someone that is conservative and under promises and over delivers. What ended up happening is we ended up leading that round. We bought 10% of the company and took a board seat and continued to add a lot more material value. Fast forward 10 months, the company just got a $100 million check, and we're up 30x on our investment. So that ended up working out very well, but it's also a company that we didn't necessarily immediately look at and immediately invest in, but we continued to keep a relationship with until the time was right, and we had gotten to know each other well enough. And it was also at the point of funding, I'd say from an investor's perspective, they had a number of different groups that wanted to come in and lead that round. But because we had been as involved as we had and spent as much time that we did, they had a preference to work with us because they actually knew our character. They knew that we can follow through on what we actually say we're going to do. And that meant a lot to them.
Good answer. We do have another hand up, but I think we do have to move on to the next speaker, and hopefully you'll be able to ask your question at the end. So thank you so much, Nish. A lot of insight there. And also I want to ask the speakers if there's a particular way that you prefer startups to reach out to you. If so, you could put that in the chat. For Sunstone, it's basically through us, the LBA. But John, if you have any other answer for that, it's fine. But for the rest of the speakers, yeah, just a preferred way for startups to reach out to you. Now we have Anne Blum from Angular Ventures. Go ahead, Anne.
Hey, thank you so much. And thank you all so much for having me. I actually come from the accelerator world, so I love, being involved in these kind of things. I ran 3 different accelerators before shifting to the VC world. So yeah, hi. I am from Angular Ventures. We are a first check fund that is based in London, Tel Aviv, and New York. I am actually the second hire. We were founded in 2018. We typically invest anywhere from 250,000 to 2.5 million. And we like to invest as early as possible. So pre-product, that's great. We can literally just have a founder and an idea and we'll run with it. So we have, our philosophy is really key to what we invest in. We're very high conviction. So we're really true believers in the founders that we back. We're high concentration in the sense of we only invest in very few companies per year. We do not do spray and pray, and high impacts. We worked really hard for the founders that we invest in. We're like to see ourselves as an extension of their team, and we try to focus on things that really do move the needle. For a bit of background on us, our track record, the team behind Angular, of the 30 investments we had done, 5 of them became unicorns, 2 of them have already IPO'd. In the current portfolio, which is now live since 2018, we already have one unicorn, 2 baby unicorns just under the level. And we announced our first fund in 2019. That was a $41 million fund. We announced our second one a few months ago, and that is an $80 million fund. We invest anywhere from pre-seed, seed to Series A. And we're focusing on deep tech and enterprise companies with roots to Europe and Israel. So that can mean the company is from there, or one of the founders is from Europe or Israel. Our current portfolio is 31, but we're continuously investing, so we're actively deploying. And the thing that we really do focus on is value add. That is actually the sole focus of my role, is helping our portfolio companies be successful. And the way we do that is, I'd say we focus on 3 core approaches. The first is we have a very robust Angular advisory partner program, and those are the best of the best people, subject matter experts. We have a couple unicorn founders. We have the product lead at Google, who are working with our portfolio companies really intensely one-on-one to help them mentor and guide them through their challenges. We're also working with our portfolio companies on helping them get new customers, because especially at the pre-seed stage, many of the companies we invest in don't have any customers. So being able to just generate one can be a huge value and quite game changing. And then lastly, this has become more and more of a need for our portfolio companies, especially lately. The market's been interesting. We focus a lot on helping our companies with their talent. So build out their team throughout the US, throughout Europe, and throughout Israel. And as far as what we look for, we are really interested primarily in the founders, because most of the time we're investing, there isn't even really a product yet. That is what we are basing our decision off of. And we look for founders that have domain expertise, who are subject matter experts in the areas that they are building a company in. And we love experienced founders. So we, for example, in our current portfolio, we have 2 portfolio companies that were founded by previously, by founders who had previously founded a unicorn company. So the one that I can publicly say is Firebolt. So we're invested in Firebolt. They recently announced that they're a unicorn, and their founder was the founder of Sisense. We're also looking for companies that are interested in global scaling globally. So primarily the teams we invest in are originally from Europe or Israel. So we really want to help them expand to the US, especially since this is such a key area for the enterprise market. Lastly, I'd say that we are focused on deep tech. And what that means is we want to focus on startups that have a very high barrier to entry with their technical aspects. So we do a lot of B2B SaaS, a lot of AI, ML, dev tools, and lately we've been getting more and more involved in investing in kind of cutting edge stuff. So we've done a few quantum deals, we've done a few space deals. So that's been a lot of fun. We really look at everything. The only thing we won't look at is anything that's B2C or in the pharma space. And I'm happy to take any questions.
Thank you so much, Anne. And audience, what questions do we have for Anne? I just want to say that the thesis of leaning into each of the companies resonates a lot with us.
And could you say the name of your VC again?
Sure, it's Angular, like an angle, yeah.
It looks like Ozzy has a question.
Hey, thank you. Hey, Anne, nice to meet you. I'm Ozzy with Pickle here in downtown Long Beach. Nice to meet you. I'm also a dual citizen, Israel and America, if that helps at all. My question is it's 2 parts in regards to actually going through diligence.
Mm-hmm.
What's the best way to go into diligence, requesting a term sheet without sharing too much about your company, just to make sure that the investor actually is interested in moving forward. A lot of times investors just want to ask for diligence and see, your data room, and potentially you have IP that's private. Do you have any suggestions about how to best maneuver that conversation?
So I think what you should do there is, just as how the fund is diligencing you, you should be diligencing them, right? So talk to companies that they've previously invested in, do reference checks on the VCs before you open up your data room to them to make sure that they're legit and they have no bad intentions, and that they're reputationally sound. I would say, for us, we don't sign NDAs. It's just not part of our thing, but we do act as if there was one in place. And we are also incredibly careful to never share any information we learn from, a portfolio company or a company that we're thinking about investing in with any of the other companies that we work with. And I can't speak to other funds, but for us, that's incredibly important.
Is it standard practice for you to go through diligence only with a term sheet in place? Like to get access to the data room only with a term sheet?
So with our diligencing process, I'll tell you a little bit about that. And obviously it depends as far as what stage the company is when we're talking to them. But we diligence the founders extensively. We do customer reference calls. We do look at obviously their data. And then we'll issue a term sheet if we would like to invest.
Got it. Makes sense. Okay. And my last question is, it's short, I hope. When an investor is always who else is in the round, who's leading the round, it's kind of a little bit of a social circle, right? Like they want to know who else is involved. And just as we would keep your information private, where we wouldn't share that, what's the best way to maneuver that kind of conversation to very professionally say, this is, again, I guess, private information. We're moving forward with term sheets. We can't really share with you who else we're talking to.
Yeah. Okay. I like this question a lot. So I'll say for us specifically, we like to be contrarian investors. If no other VCs are interested, we'll be more interested, right? Because that means we'll get a better deal. And, this is something that's really can be technically groundbreaking. So I think this is a fantastic question, and it touches to something that's really important. First of all, we'll invest when there's no other VCs. That's not a problem for us. I do think that if a VC is asking who else is joining this round, I think that they're looking for external signal that is a dealable deal for them. And the signal that I would receive if I was a founder that they were asking this to is that they're not very high conviction. Right? They're looking for external conviction because they don't have it themselves. So I would say, we're not willing to share that information, or if you are, if you have Sequoia joining, sure, share if you would like to, but then be ready for the flood of term sheets. But I personally would be willing to let that investor walk away after you tell them that you're not willing to share that, just because they don't have that conviction there already. So they're probably not going to be that partner that you want.
Got it. All right. Thank you so much. Appreciate it.
Shira.
Hi, Anne. How are you?
Hi.
I love that point. It's like, we have to choose who's on our cap table as well. You had previously indicated that Angular invests into enterprise tech companies, or those selling into Fortune 500. And so in Pink is certainly that. We do have companies like Live Nation that we're speaking to that, we would like to, commit to hiring talent on our platform. But we are not, exclusively enterprise. So does that still fit the thesis?
Yeah. No, that's a great question. And so a bulk of our portfolio companies are exclusively enterprise. We do have some portfolio companies that go to SMB or a mix of SMB and enterprise. So that's something that we absolutely would look at and, potentially would invest in as well.
Okay, great. Thank you. And it reminds me of Fiverr, which is an Israeli-based company. And they also, they have enterprise plans as well as B2C. So thank you for that.
Adrian, you had a question?
Yes. Thank you. Hi, Ann. Really like your philosophy for investing in early stage companies and being the first investor. So props to you on that. I wanted to ask, what is the typical length of due diligence that you have with pre-seed and seed stage companies?
That's a great question. It's one that has changed since I joined the team. I think we're in a series of change as well, where investors are becoming a little bit more cautious, and we might be reverting back. But I would say in this last year, the diligencing time has definitely been cut down. So our preference is obviously we want to have the time to diligence, to do a proper diligencing, to speak to former employers, customers, etc. And typically that'll take a few weeks. We have, as of late, had to cut the diligencing time down just because that's where the market is going. And if you want to be invested in a hot deal, sometimes you need to do that, where we can cut diligencing down to a week or a little less. But because we do lead, especially for the deals that we do lead, it is really important for us to get that time to diligence properly.
Good to hear. Thank you.
Zan?
Yes, Zan? Oh,
I think
we can't hear you. Yeah, still not working.
Any other questions?
Are there any other questions? I don't think we have any other raised hands right now.
Zan, do you want to type your question into the chat?
Hold on. Perhaps we come back to this at some point. But yeah, we should move on to the next speaker anyway. But
Cynthia, sorry, did you have?
Hi, Zan here. Can you hear me now?
Oh yeah, now we can hear you.
So I'm really sorry about that. My laptop with microphone was playing up, so I run upstairs. So I'm actually based in UK in England, and I'd just like to sort of hear your opinion of what's the sort of difference with dealing with UK and European-based startups and to dealing with US startups.
Mm-hmm.
Because I'm dealing with quite a few investors in the US and noticing a lot of differences between them. So I'd love to sort of hear like your.
Yeah. So what's interesting is our team, we're 4 people, and I'm based in New York. The other 3 are all based in London. What's interesting is none of us are actually British. The other 2 are Americans and 1 is Australian. Because we're investing, in European and Israeli startups, most of the companies obviously we're dealing with are, we're dealing less with American startups. We do invest a few times in American startups when they have a European or Israeli founder. I think that there used to be quite a gap between European and American startups. I think that gap is closing. We're very bullish on the European and UK region, as we think there is a vast opportunity there. The talent is incredible. The valuations are typically a bit lower than American startups. So it's an area that we're very excited about, and that's why it's part of our geographical mandate to focus on Europe and on Israel.
Brilliant, thanks.
All right, great. Thank you. And hi, Joy. I know you have a question, but we have to move on to the next speaker. I'm so sorry about that. Hopefully you'll get into Anne's breakout room to ask her that question. But yeah, let's go ahead and speak with Ben York from RampRate.
Hey, how's it going, everyone? Great to connect with you all. I'm coming to this conversation from a little different perspective than what we've heard so far, and I think it helps to give some historical context on what RampRate is before diving into our investment thesis too. Prior to my time joining the firm, we were primarily a IT consulting company. So working with Fortune 500 companies, reduce their IT costs, retain a portion of the savings, rinse and repeat that model for a decade plus. And they were very successful doing that, right? And so, along the way, realized they didn't want to continue to make wealthy companies richer, and instead wanted to help the founders of tomorrow and apply a lot of the same skills, services, and enterprise connections to those companies. And so that was really where we've pivoted to a growth strategy model, kind of like an accelerator, but a little bit different, more hands-on, more consulting focused, and a family office as well. So I oversee our CEO's personal portfolio on the family office side, but the strategy and the thesis overlaps between both of those entities. So what's cool is we have a wide range of the ways we can work with companies depending on what their needs are. And we have a pretty large range of services that we offer too. So we focus mostly on early stage companies, and again, helping to bridge that gap between kind of seed and Series A stage companies to enterprise clients coming from that background. Our industry focus is pretty broad, but we are especially focused in the blockchain space, specifically digital media, digital identity, and the infrastructure layer coming from the IT world. But we're also deeply focused on health and wellness. And believe it or not, there is some pretty significant overlap between all of those categories. And we're actively partnering and building in that white space too. So, again, we look at the earlier stage, seed, maybe Series A, and across those sectors, our check size might be on the smaller end to start, 50 to 100K, but can be as high as 250 to 500K, depending on, our conviction in the project. And I think there's, we've written checks as high as $1 million as well when we need to. We also like to bring in top tier VCs and angels to co-invest with us. And we have some pretty significant relationships from major VCs in the US and in Asia as well, Singapore and elsewhere. And so within the health and wellness space, we look at everything from, well, I should say natural wellness, broadly speaking, but also focus on cannabis and psychedelics and everything that fits into those categories too. So really kind of at the frontier of a lot of these markets, these emerging markets. And kind of going into some of the areas where we specialize, we'll do everything, working with startups. We'll do everything from business plan revisions to strategic business development, marketing help, capital raise assistance, cap table strategy, all that kind of stuff. And I always forget this piece in my little spiel here, but everything we do has a social impact component as well. So one of my colleagues on our team is our director of social impact, and his entire role, whether it's for our investments or our services clients, is to develop systems to achieve specific outcomes. And if we want to achieve those certain outcomes, what do we want to see in the world? What systems do we need to have in place to realize those goals too? So that's core to everything that we're doing, from the investments to the services work. And yeah, our timeline's pretty quick as well. It's designed to be as light on the entrepreneur as possible. We understand that fundraising is a full-time job in itself, and our diligence process shouldn't add to your workload. There are certain boxes we need to check and conversations that we need to have, but we don't want it to be onerous on the entrepreneur and slow them down from building what we want to see in the world. And yeah, I'll kind of leave it there. We within the relationships that we bring from other VCs and angel investors, we're co-investing alongside them, but shoot, there's something along those lines I was going to say too. We're bringing them in pretty early stage, either syndicating rounds or co-investing alongside them. We're also invested in funds as well, and so we get access to deal flow that way, but also can it goes both directions too. So we're not just co-investing with those funds, but we're bringing deals to them as well. And happy to answer any questions.
Awesome. Thanks, Ben. Thanks so much. Who's got a question? Ooh, Adrian's got another question.
Yeah. Hey, Van. I was wondering if you get a significant source of deal flow from the Founders Network.
Yeah, so that's an increasingly an area that's increasing in terms of the deal flow that we're getting. I didn't really share much about my background. I was in finance early in my career at Citigroup. Realized I didn't want to move treasuries around for hedge funds to make a couple basis points here or there, and wanted to build with entrepreneurs and invest in them. And so I've spent a lot of time in the health and wellness space, but obviously I have a fintech background coming from finance originally. But yeah, so I'm a mentor with Founder Institute San Francisco and the Ease Momentum Accelerator as well. And then, clearly working with Long Beach too, and trying to build that partnership. But it's a great source for deal flow, right? And it's not just from those founders in those cohorts, but their network too, right? Like they've got great deal flow themselves, friends building stuff, former colleagues, whatever. And we're just trying to expand that network as far as possible. The other group that I'm affiliated with is VU Venture Partners. I was in their second cohort here in San Francisco. They're now a global investing group too. They're San Francisco based, but also have operations in Europe and in Singapore, I believe, as well.
Yeah, we've had VU on here previously as well. Yeah. Yeah, Shira?
Hi, Ben. Thanks for sharing. You, of course, mentioned social impact. Is diversity, equity, and inclusion a space that your fund is interested in?
Yeah, it's definitely something that we're looking at and investing in. It's also, not just supporting projects where that is in companies where that's the aim, but also to develop those strategies and initiatives within other companies where it might not be as obvious. Just because that's not the primary goal for the company doesn't mean that it shouldn't have its own ESG criteria and standards that they're upholding every day, that they're coming into the office or virtually, I guess. But yeah, we have like entire matrix developed to evaluate startups based on their ESG criteria. A lot of it is heavily focused on reciprocity with indigenous groups, given the psychedelic focus, but it's constantly being reworked for different industries and the different stakeholders in those industries as well.
Amazing, thank you.
DW.
Hi, Ben. I'm DW Farrell with Localite, and we're a fintech company and also a public benefit corporation.
And LBA alum.
And yes, Long Beach Accelerator alum. And so on the same GSE mission-oriented investment, on our end, we see the strategic value of our model. Economic development for small businesses is essentially the focus. But from an investor standpoint, you mentioned criteria and you mentioned strategy, and I wanted you to kind of speak into that. The assumption I might have is, well, it's good for a press release, but from an investment standpoint, how do you see it in terms of being leveraged for business goals?
Yeah. It's a great question. I think the primary point to make there is that doing good is table stakes for operating a good business, right? If you're not working to improve the world that we live in, in this day and age, you're going to have a tough time doing business and getting clients, whether that is from a CPG angle or from an enterprise perspective, right? And so that corporate governance, it is good for a press release, but you also have to uphold those standards on a consistent basis, or else it's just greenwashing and not really not really worthwhile, and people see through that. So it is part of our evaluation. It doesn't necessarily mean that if a company doesn't have those processes in place already that will immediately pass on them, because we do have the services side. We are able to work with them to develop those initiatives. And for a company that might not think that they are ESG focused, we can actually kind of turn that on its head. So for example, one company we're working with right now is a VR workout application. And on first glance, it's like, okay, well, what is this company doing to have an impact on the world? Well, they are providing headsets to people who might not have access or need to, get out and exercise more. It's kind of a gateway for some into a more fit life, and being able to monitor the hours spent in interacting in that platform can translate into, and there's also biometric feedback too. So we're actually able to quantify, how much better off they are too. But, it's those kinds of metrics that you kind of have to dig a little bit deeper to unlock and develop. But they can be really compelling, not just for bringing on new clients, new customers, whatever, but investors too, because it shows that you're aware of a lot more than you might otherwise be leading on.
Thank you.
Awesome. We're running out of time a little bit here, but Cynthia, I know we passed you over before, so let's do Cynthia and go ahead.
Just a quick question. You mentioned blockchain and digital media. Are you getting involved with startups that are in the ad tech and streaming spaces at all?
So the streaming space is an area where we have a lot of experience. It is within our thesis in terms of the sector. It's not something that I personally have a ton of knowledge around, but our CTO, CEO have a lot of experience in the streaming category. So yes, I would say yeah.
Okay, thank you.
Mm-hmm.
All right, thanks so much, Ben. Really appreciate it. And Valentina Rodriguez from Wonder Ventures is up next. And just to state, she's a little under the weather, so I think she's not going to be on camera for us, but really appreciate you staying the course and being here for us, Valentina.
Yeah, of course. Hi, everyone. Valentina Rodriguez. I am an investor at LA-based Wonder Ventures. Our managing partner and founder started the fund about 7 years ago after being a founder in LA himself. He started a app called Pose. It was basically Instagram shopping before that was a thing. It was a social shopping app. Grew to 10 million downloads, 35 employees in Santa Monica, raised 3 rounds of venture, all the way through acquisition. And through that whole process, kind of picked his head up and realized how much more difficult it was to access great early capital and support in the area versus the infrastructure that was established in San Francisco or New York. And so next step was to start Wonder with the whole premise of finding and supporting the best founders in LA as early as possible. And when we say LA, we mean SoCal broadly. So Santa Barbara to San Diego kind of all falls within our area of focus. We are currently on our 3rd fund, continuing to have our geographic focus be our main thesis, really. So we're a generalist fund. Beyond that, we'll invest kind of anything across enterprise and consumer technology. Only things we kind of have higher hurdles for are anything with physical hardware applications or layers to them. We are on our 3rd fund now, which is a $32 million fund that we formally announced last month, but we've actually been investing out of since last year. So far made, a handful of investments out of it. It's myself and Dustin on the investing side, and then we have had a platform and community, Taylor Bullhack, who's X-Square Expert, kind of growth expert, is institutionalized our whole support framework for all of our portfolio companies. At this point, we have about 84 active portfolio companies. Something kind of unique that we brought onto this latest fund, we brought on 64, we call them founder LPs. So within our LP network, we actually have 64 of the top founders and operators from within the LA tech ecosystem who have come in and reinvested in that ecosystem through us. And they're very hands-on with anything from helping us with diligence to coming in alongside us formally or informally as strategic angels, advisors to our portfolio companies, et cetera. Kind of stop and leave it there for questions, but that's the gist on us.
Venture group name?
Valentina. I guess I should add also, we pretty exclusively lead or co-lead pre-seed and seed rounds. So like a few other people have said, sort of nothing is too early for us, like strong technical team coming out of you know, strong backgrounds who have an idea and just need some capital run with. That's our bread and butter. And all the way to, you know, you have a product you've built that's functional and you just need that early money. So we'll write 500K to $1 million size checks in those early rounds.
Great, Valentina, thank you. Let's see here. I think Disha has first question.
Hi there, Valentina. Just a quick question. I know you guys said your investment thesis is geographic. We are Chicago-based, but our next kind of beachhead is going to be California. We are a B2C marketplace for culinary creators. Would you consider companies that are expanding into California, or do they have to originate out of SoCal?
If that means that the next iteration of your team is based in LA, so people who will actually be operating in LA and contributing to the LA tech ecosystem locally, people consider it, but has a higher hurdle for us than a team that's entirely based in SoCal or half based in SoCal or initially launched in SoCal.
Okay, thank you.
Yeah, of course.
Shira.
Hi, Valentina. We are based in LA and actually applied to your Wonder from Home grant 2 years ago.
Oh yeah, I wasn't around for that, but
yeah, but it was when we were just literally an idea. Obviously, we're way farther along now. And so my question is, what is the best way for founders who, you know, may be on your radar but haven't caught up in a while, you know, to get on your radar now and, you know, catch you up to speed?
Yeah, so happy to share my email with, I don't know if Andrea, are you sharing our emails with everyone in the cohort afterwards, or?
We certainly can, if that's the best way. But to keep it more general, what's the best way for any of the startups on the call today to reach out to Wonder?
Yeah, I mean, if you know someone in our portfolio, or you can go through our founder LPs on our website as well. So if you click under team, it'll have all our founder LPs. If you know anyone in our network, a warm introduction is always the best thing. But aside from that, feel free to reach out to me on Twitter, on email, whichever way possible. Yeah.
Thank you.
Yeah, for everyone here, I can't overstate the importance of warm introductions as well, but you know, that can lead to certain outcomes, and so it's great that we all have an ability to sort of reach out directly as well. Go ahead, Justin.
Hi, Valentina. I just had a quick question. Besides capital, what do you think that Wonder Ventures has that is your next expertise that you can offer to early stage startups?
Yeah, so it's a few things. First of all, we're truly by founders for founders. Both myself and Dustin were founders before being on the investing side, and our head of platform is, you know, X growth at very large companies now. And so we truly operate under that premise. Like we know what it is like to be in those earliest days. You know, I was a solo founder even, so like I get it. Beyond that, Taylor, our head of platform, has really institutionalized our entire support system. So anything from making sure that all of our, you know, founder LPs, advisors in our network, et cetera, are super hands-on and at the beck and call of our portfolio founders. That's probably the single largest, you know, point of value we add, because we really aggregated such an incredible mass of the top people in LA tech for providing that support. And then we have, you know, kind of standard that most other funds have, but access to, you know, special rates with service providers, et cetera. So.
Okay, great. Thank you.
Yeah.
Mike?
Hello, Valentina. So I'm just going to lay this on the table, actually, because you said something that you highly value, you know, a strong tech team with tech that is partially developed, but they need money to move on. And this is the conundrum, the exact conundrum I'm in right now, because I have a really specialized CTO with a great position full time. And so I need to raise money for this company to get him from, you know, to take him from that company, right? So that he can join us full time and we can move forward at the pace that we need to realize the opportunities. So I'm just wondering, I guess, what, you know, we're building our proof of technology right now. We've already built in the past another product that is very similar. How far along in tech development, if this is a general question, it's kind of ambiguous, but if you can give an answer, I guess, you know, in terms of, you know, we just founded this company, for example, right? But we have over 5 years of experience prior. So in terms of traction, you know, what kinds of benchmarks do you think you'd be looking for?
So we like to stay true to the fact that we will write a check earlier than anyone else, and that can mean pre-product. That being said, we love to back builders. So if you come to us and you've already built an MVP while you're still at your other company because you've been moonlighting, like, that's pretty incredible. But understand the circumstances of that not always being possible. So in our case, we will look at pre-traction, early wireframes, MVP, as long as there's, you know, that clear indication that that technical lead is ready to jump ship and come on full time. Yeah.
Gotcha. Okay, great, thanks.
Yeah.
I think we have to move on. So Adrian, sorry, we're not going to be able to get to your question this time, but we want to thank Valentina so much and introduce Will Chockley from 75 and Sunny to talk a little bit about what you do.
Hey guys, thank you again to Andrea and team for putting on this event, and thank you to the founders for listening to all of us drone on for an hour and a half. So great to be here and great to have the opportunity to chat with you all. So quick overview, I work for a firm called 75 and Sunny. 75 and Sunny is, I would describe as a LA-based venture fund who really tries to prioritize backing LA and Southern California-based founders. We were started by a guy named Spencer Raskoff, who's the former co-founder, CEO of Zillow, also co-founded Hotwire.com, and then more recently has started a number of other companies, including .LA, if any of you are familiar with that, which is the premier news source for LA tech. Everyone should check it out. And so what we're doing is we're generally writing sort of pre-seed, seed, Series A checks at kind of around the range of 50 to 500K. And let's see, focus areas for us are sort of the biggest one is prop tech. Given Spencer's background at Zillow, we spend a lot of our time there and feel like we can really add a lot of value to folks in the prop tech space. We also spend a lot of our time in kind of future of work or HR tech, the creator economy, and Web3. About 40% of what we do is Southern California, LA based, and we're very excited about that, hence the name 75 and Sunny Ventures. And let's see, my own personal background, I was at Bain Capital Ventures before joining up with Spencer to help him launch 75 and Sunny last year. And before that, worked at Thumbtack, which is a Sequoia-backed company that's most recently valued at $3.5 billion. And love to work with founders. So in terms of what we can do to help, because I'm sure folks are excited about that. I saw a lot of questions on that front. A couple of areas that we really help with. Number one is on fundraising. So our network spans all of the top venture funds across the country, and some in Europe and overseas as well. We are absolutely happy to make introductions, work on pitch decks, practice your pitches, all of that. We really want to be a resource there. And that's really where I spend a lot of my time, is working with our founders on that front. We also have Spencer, who's a multi-time founder of a really successful order of magnitude. And he does this because he really loves to work with founders who are early on in their founder journey and offer product operational guidance from his end. And then we also really try to help with hiring. We have a massive network of folks, both from Zillow and elsewhere, who are constantly looking for exciting new opportunities to work at. And we really love to place them at our portfolio companies. And that's the quick story on us. Oh, we generally don't lead rounds. We just follow on and work with other investors who lead the round, and try to play as nice as we can with other investors, be as helpful as we can to founders, and generally just be a good player in the LA and Southern California ecosystem. So I will pause there. I know we're running short on time, so happy to open it up to questions.
Sarah?
Do you only invest in LA-based companies?
No, so it's about 40% LA, Southern California, and then 60% elsewhere. Vast majority is US based. We have a few investments in Europe and a couple in Latin America, but generally all over, but we have a special place in our heart for Southern California.
Got it, thank you.
Shira?
Hi, Will. I'm an LA-based company. Love the name. Just curious, how would a founder go about getting an in-person meeting, since we're all here in La La Land together?
That's a great question. I think I'm happy to meet for coffee. I'm based in Santa Monica, and so always up to meet for coffee. Generally, I would say we try to do Zoom meetings for a first meeting, and then move on for an in-person meeting and for a second or third conversation as well.
Okay. And is there any criteria sort of, to get to the Zoom meeting or the in-person?
I would say generally just if we want to move forward and kind of move forward in the diligence process, get to know folks a little bit better and get to know the company a little bit better, definitely happy to meet up in person.
Okay. Thank you so much.
Adrian?
As follow-on investors, what percentage of your startups are from first-time founders? And do you think that being follow-on investors skews that in any particular way?
I don't think it skews it per se. I would say that's actually not a metric that we've tracked. I think that's definitely an interesting metric to look at. I would say we probably are investing in first-time founders at a similar rate to a lot of other folks in the venture ecosystem. I think, to be quite frank, one of the things that a lot of venture investors look for in founders is having some prior startup experience, and having been a prior founder is obviously incredibly valuable for starting a new venture. Hence why folks like Valentina and Dustin at Wonder are so helpful to founders starting off on the first time.
Aiden?
Thanks for your time, Will. Zillow and Thumbtack both are more single-family focused. Do your connections touch the multifamily space as well?
Yeah, I would say, yeah, we're definitely connected to folks in the multifamily world. The core of what we do, I would say, generally focuses around single family, because that's really our true area of expertise. So if you look at the companies that we've invested in, the vast majority of those deal with single family homes, but definitely spend a lot of our time in multifamily and commercial as well.
Thanks.
And Joe?
Hey guys, thanks, great event. I just wanted to ask, like, which, and I don't know because I didn't know, but you said you had previous experience at Zillow, or your team did. Which area within Zillow were you guys focused on, like, as far as development of the site, real estate analysis, or, within Zillow. It's a big company and I'm kind of interested, and I'm working on a co-living startup here. I've had a real estate license for over 20 years. So, you know what I mean? I know it, and I have a mortgage license. So I know both sides of it. So I'd be kind of interested, like which area you guys have experience in bringing.
Yeah, so my partner Spencer is the former co-founder and CEO of Zillow for about 10 years. So he has a very, very deep experience with all aspects of Zillow's business, both on the sort of marketplace agent side as well as on the iBuying side, which sadly shut down earlier this year. So he's got total experience with all.
I did not know he was the co-founder. Now I kind of feel like I take my foot out of my mouth.
all good.
Yeah, so it looks like we have both run out of questions and run out of time, and I have to apologize because this is, my me trying to fit too much into one day. I just, my eyes are bigger than our hour-and-a-half stomach here. So we're not going to be able to get to the breakout rooms today. Hopefully we will be able to do something like that in the future to have a little more time with everybody. But I really want to thank everyone for being here, our VC panelists and our audience. Panelists, you've had some great insights for our audience, and audience has had some really fantastic questions that I think helped shed some light on a lot of different areas that were helpful for many different people.